Good morning. Today is Wednesday, October the 12th. The time currently in Singapore is 10:29 in the morning. And overnight, we have seen Wall Street actually attempt to rally, but unfortunately, towards the last few hours of trading, it lost back everything and closed again on a weak note, but slightly marginal positive on a close-to-close basis relative to Monday's closing. So we can see this is the Dow Jones daily time frame. We can see basically the market has remains pretty weak, but as far as this week is concerned, since the end of September, the low in September, which was registered at the end on the very last day of September, remains intact in the Dow Jones Industrial Average. The low traded was 28,725.5, and the market basically has been hovering above this price point. Last night closing was 29,239.2. So basically this market is still hanging on for dear life, but it's kind of difficult to hold the line because all the fundamentals points to much lower prices, and there is a risk that the market will take out the September low and heads towards the 27,000 levels over the mid to long term. Okay, so the underlying reason obviously is that the Federal Reserve will continue to aggressively hike its rates, and tomorrow at 8:30 p.m. We will be receiving the updates of the latest CPI numbers, and market expectation is that if the number doesn't shows that despite the many rounds of very aggressive rate hikes, if the CPI headline numbers does not seem to be kept, then obviously the market will believe that the Federal Reserve will have to double down and become more aggressive based on numbers. Okay, we have seen last Friday's non-farm payroll did not give the Federal Reserve any kind of relief, because despite rounds and rounds of very aggressive rate hikes, unemployment rates slides back to 3.5%, which is the lowest in this series. So they do not see the numbers reflecting that their policy of aggressive rate hike is working. So the CPI numbers will be another set of data point in which for the Federal Reserve will be watching very, very keenly. At least the headline numbers must come off a little bit, at least ideally below the 8% point, but market is not that optimistic, so we will have to watch what the numbers will be tomorrow, and market expectation is that they are gearing for the worst possible outcome. So the market is a little bit soft for the last 2 trading days. Over in the S&P 500, we have seen something else. Last night we saw the low traded that took out the September low. So far we have the Nasdaq 100 taken out the September low. Yesterday we saw the S&P 500 did the same thing. The only one last standing, the one major index that's still holding on to the September low is the Dow Jones Industrial Average, and I think it's just a matter of time that too will break the September low. So yesterday we saw a low in this S&P 500 to 3,568.5, and the market is gearing for a possible continuation of this decline, possibly towards the 3,150 levels, and that is not that far away from where we are. Markets is just barely above the 3,006. We are looking at 3,150. So there's a bit of a room left for the market to move. Okay. Now over in Asia, we saw that the Hang Seng practically sell off this at the get-go this morning. You can see the market has been falling since the beginning of the week, and 3 days in a row we can see the market actually has been continuously been trading much lower. This morning low at 16,447 is the lowest the market has registered this year, and the overall look and feel for the Hong Kong market does not look very, very bright. Shanghai is also continuing its downturn. It took out yesterday's low. We can see that the market was, I was expecting maybe 3,000 levels to hold, but it looks like it is not working for the time being. The market actually registered a low for this since the high was traded somewhere in the middle of the year in July of 6. Okay, we can see the market now is below 3,000 points at 2,943.39. Okay, so this is not that far away from the year's low at 2,863.65. So it's only a matter of time. I think the market in the Shanghai Composite Index will take out the year low as well. Over the Nikkei, we can see the market is practically selling off. we can see that after the big drop yesterday, the market is now, although it is above 26,000, but I think it's a matter of time. It will go down to 25,500 levels and possibly even below the year low at 24,681. So the entire equity market space appears to be pretty bearish for a time being. And over in the currency market, we saw dollar yen successfully surmount the 146. Like I mentioned many times earlier on, the 146 does not look like a level that the BOJ will come back in again to defend its yen. So the market has decided that since the BOJ is highly unlikely to come in to intervene, so the market took it up and it successfully broke those levels this morning, and very likely the market will go for 147.67, which is the 1998 high. But I don't think it will stop there as well. I think it is very likely the market will extend its rally all the way to 160.40, which is the 1990 low, which is the April 1990 high. Sorry. Okay, so this is a more of a rounded number. If the BOJ wants to come in to intervene, this is more a likely level than 146. Okay, so of course the other number, which is a round number, is 150. But I think they have seen 146 does not seem to have worked very well for them. Maybe they will reserve their resources and try to intervene at 160.40. However, I have just mentioned, like I have always been maintaining, unless the BOJ intervene on a concerted effort with the other central banks, the impact will not be long lasting. This time we saw that the intervention only lasts 24 hours and the market went back to where it was before the intervention. So unless there is a concerted effort by the all the central banks, especially if they don't rope in the Federal Reserve, it's just highly ineffective. Okay, I suppose at this moment in time, the Federal Reserve will have no incentive to help out the Japanese, because the Japanese themselves it's not helping themselves by trying to manage the yield curve in the bond market to restrict the rise in the JGB, which is the Japanese government bonds, to 0.25. And by doing that, suppressing the yield curve, they will have to sacrifice the currency. And unless this policy changes, which is unlikely in the short term, the yen is likely to go into a free fall. Okay. Over in sterling, sterling did not actually melt down. Now is currently at the 50% retracement point from the low of 103.55 to all the way to 114.95. Okay, so basically the market has come back to 109.30 levels, which is a 50% pullback of the entire rebound from 103.56. So we can see that yesterday what is holding the sterling from actually melting down was the fact that the Bank of England is in the market. In fact, they actually doubled down on the commitment they have been supporting the UK gilt market, which is the bond market, to the tune of 10 billion pound yesterday. So previously they intervened with a quantum of 5 billion pound, but yesterday they actually doubled down in their efforts to control the potential crack in the UK bond market. So 10 billion pound, doubling down the amount to hold the market, give the market the impression that the market is actually pretty bad, to the point whereby they have to double down their resources just to hold the market, and that will have complication going forward, because the governor of the Bank of England did make a statement yesterday to the effect that they are giving the UK pension fund 3 more days, which is up to the end of this business week, to get their books in order. The unspoken thing was that what happened after this week? Are they going to be in the market to support the bond market in the UK? If not, all hell will break loose, because this will cause a contagion that will spread all over the world, first to Europe and then back to New York. Okay, so this will have complication going forward. And if this bond market implodes, which is very likely because it's causing a lot of stress in the credit market, we are already hearing news that a major Swiss bank is already wobbling, and maybe that will bring down another big German bank. And if that be the case, there will be knock-on effect, because all these banks has a lot of very complicated credit default swaps in the book, and these take times to unwind. When the market is illiquid, it is is probably going on a fire sales. So this will have complication. This coming 1-2 weeks is going to be a very, very dangerous period for financial markets. Okay. So over in the euro, we can see the euro has actually been sliding more aggressively relative to the pound. Of course, right now the market has already retraced something like 70% from the peak of almost $1 to the $1, okay, which is parity levels. So it is only a matter of time. At the rate it is coming down, there's a very high possibility it will crack the year low at 0.9535 to register possibly a new low for the year. Okay, going forward, the dollar remains very, very big, and do not stand in the way of this raging bull, because the dollar is on steroid right now, because the Federal Reserve is stepping on the gas in terms of rate hikes. Okay, and let's take a look at Aussie dollars. Aussie dollars registered a new low for the year. This morning it took out the 63 cents, went up to $62, 62.44 cents. Okay, relative to the US dollars. So we can see that the dollar strength is quite universal. It affects all other corresponding currencies. So the only game in town right now is to long dollar, and all other currencies are suffering because of that fundamental shift in the reason why the dollar has been appreciating. Okay, over in the currency market last night, there was a brief rally in the currency oil market. Let's take a look at the 60 minutes. There was a moment of time market actually stabilized and wanted to go up from as low as 88 cents, 88 and a half. I think 88 and a half cents. It went up to just above 90 cents before it unfolds back to the to break the yesterday's low. So basically the market is now hovering at around current levels. Hopefully it doesn't go much lower. I am thinking that this market may actually offer some kind of technical support near this level, which is 87 cents. Okay, I'm sorry, $87. I already went long the crude oil yesterday. I have placed order to buy in $99, $98, and $97. So 3 of my orders, 2 are filled. So basically I still keeping a very positive outlook. Well, in the event it doesn't work out, then of course I will have to bail out. But I think the fundamental do points to higher prices, and I do believe $100 a barrel is going to be something that we can look forward to again. Okay, over in the gold market, we similarly see a rally attempt. Went up to as high as $1,684. Okay, almost $84. I'm also long the gold market, and I have been long since late last week, and I've been basically hanging on to all my long position, which has not been that good, because I was actually long near the 1,700 levels, just under it actually, and I have bought another level last night. So basically I have 3 long position, hoping that this thing will not melt down below $1,640. So if that happens, then of course I will have to lick my wounds and call it a day and come back another day. Okay, so basically I have long the gold market, I have long the crude oil market, hoping that something may happen here. Okay, and over in the silver market, we can see that the attempt to rally was pretty shallow, but the pullback was very, very deep. So we can see that the silver market right now is hovering just above the $19 level. There's a very there's a chance that $19 may hold, okay, technically, but this pullback, like I said yesterday, was a little bit deeper than I liked. So now what I was hoping is that the market can do a simple rebound, so that will influence the gold market. Maybe we'll see how it is if it's deemed to be a 3-wave pullback, maybe I'll hold on to my long position and go. But if this thing unfolds into the 5-wave, the next rally I will have to bail out. Even if it means taking a loss, I will have to bail out. Okay, so over in the crypto space, nothing really much happened. Market has been drifting lower and lower. This is Bitcoin. Prices now is below 19,000. But there's really no real catalyst as to the crypto space, because there's no fundamental as far as we can see that is influencing prices in the crypto space. So market just simply drifted lower. In fact, all risky assets, including cryptos, all pulling back very much in line with equity markets. So we are seeing back the correlation again to equity markets, especially the Nasdaq. So we can see that like I said, this market has no incentive to go up, but in the Ether, which is Ethereum, there is every likelihood the market will pick out the 1,200 levels. And if that happens, actually, I'm actually gunning for the possibility of market going down to $1,180. If that can be done, which is with this price here, okay, if this market come to this $1,180, it starts to look attractive to me to position for a long. But again, it's going to be depending on me receiving some kind of or seeing some kind of reversal pattern in the lower time frame. So for a time being, I'm not seeing that. This is Ripple. Ripple has been enjoying relatively higher prices compared to the other coins, purely because their lawsuit between the SEC and Ripple Lab is likely to come to a end soon, as early as October 18. So we are only about a week away from that. So market is basically just hanging on to what it has. Most analysts believe it's going to be a positive result for Ripple Lab. So that caused people have been, that's the reason why people have been buying Ripple over the last few weeks and months. But again, whatever the verdict is, I think it is a call to sell. If it's a verdict that's positive for Ripple Lab, those people who have gone long all this while will no longer have the reason to stay long. They will probably take profit. And if on the other hand, the result is negative for Ripple Lab, all hell will break loose. Everything, all the gains that you have seen so far may simply unwind in a very big way. So either way, this is a coin that is asking to be sold. So we will have to wait what happens from now until then. Okay, but the other repos, the other crypto coins you can see is still struggling. Yesterday we see Cardano breaking an all-time low to 86 cents, 38 cents. So basically, the crypto space is not healthy at the moment. It's just drifting lower and lower and lower. Solana is no much better. It's just barely above the $30 levels. Binance coins, after the hack in Binance itself, in which they lost more than $800 million worth of coins, is suffering, but it did not suffer a catastrophic loss. The Binance coin itself is still holding pretty well at $267.20 as of last night. So we can see that the market is still relatively okay, despite the very negative news coming out from Binance. Okay, the other coins, let's say Sandbox. Sandbox is also barely above the all-time low at 73 cents. So we are seeing that again, quite similar patterns has been seen across all the other coins. Okay, let's say we look at Avalanche. Avalanche yesterday also saw a low of $15.71. Again, we are seeing not that great a number. Ethereum Classic is also pulling back. Yesterday they pulled back in a big way to as low as $22.76, and now it is just hanging on for dear life. Okay, this is all that I can share with you today. I will see you again tomorrow at the same time. Bye bye.